All righty. Good morning, good afternoon, and good evening to those of you around the world. Welcome to Trading Rebellion with your favorite analysts from Trade the Chain. Myself, Nick Mancini, joined by CJ and Monte. We are here to break down everything going on in equities, TradFi, macro, and everything in between. I will make the mention that there obviously was some global catastrophe going on. We're not really going to talk about that too much, but do just want to make the mention that that is likely why you saw some selling, Sunday evening and into Monday morning. But we are looking like we're, on a much better track to continue the week. So let's kick it off on a positive note, and let's not dig into any of the negatives. And I actually would like to start, I don't even think we really need to worry about DXY too much because I think we know why we saw some red candles. Equities had quite the bounce back today. So obviously, all the way down here on Friday, moved up, sold off, and now we are cranking towards a big demand zone, in my opinion. And if we can break above this, things look great. And we actually talked about this daily chart last week and how we were stuck kind of underneath the 200 estimated moving average. Obviously, great Friday, and then, worrying Monday due to, the declaration of war by Israel. But this is a hell of a close. And, I'm going to say it just because that's how I feel right now. And this is about as good as it can get for the news that we got and the reaction. So this to me, as long as we can get above 43.30, definitely looks like 43.80, maybe even 4,400 is in the market's sights heading into this week. And we also have CPI on Thursday. And if we remember, unemployment actually, rose, and that was, definitely what Jerome Powell and the Fed wanted. And CPI is predicted to come down on both CPI and core CPI. If you remember, the past couple inflation prints have been a little wonky with core thrown in. This one is expected for both to decrease. So we could kind of have a little bit of a Goldilocks week on the heels of some forced selling on Sunday evening. So CJ, Monte, what are you guys thinking? Does this set of candles excite you? Are you liking the way that S&P and NASDAQ look right now? And with CPI on Thursday, is there anything in your world that you're looking out for, as maybe a bull? I don't want to put words in your mouth.
I don't know what much excites me, but like, for instance, we couldn't have known the events that were going to take place over the weekend and how they would affect asset markets. However, what we did know going into Friday was the positioning of certain assets that responded quite strongly to this event. Some of those assets included safe haven currencies as well as gold. And now equities are getting a little bit of a news failure today with this geopolitical uncertainty, but there's not much for me, and I don't want to speak for Monte, but I think he'll probably agree on this point, is that I don't think we have too much to change in terms of our current open positions and what we're doing. Like, this is some nice positive response we're seeing out of the S&P 500, so I'm not going to question it. I don't know what's going to happen, but let's just, manage risk and let the market do what it's going to do here. And hopefully we get a nice rally up to that previous resistance level or support level you have highlighted. Well, now there's a lot there, but I was going to say on the previous chart,
I'll move back
there's one very clear one.
Apologies.
Yeah.
So I'll draw that line just because for some reason my lines on TradingView, even though I tell it to allow it on all time frames, it really does not. So this, I think if you're looking at a chart on your own and you want to draw your own lines, I think, the low from Friday the 18th is where I'm lining out as a critical, make or break. So if we reject here, I would say we're going to go back to 42.75, somewhere around there. And if we accept here, meaning, break above this level, I would say, next stop is 43.78, and then we can start talking about above 4,400, in my opinion. So, Monte, are you kind of on that same page?
Yeah, I'm on that same page. And the one thing I'd like to just kind of add to this analysis as a piece of the puzzle is the DXY. So if you don't mind me throwing up that chart real quick.
Go ahead.
And, obviously we've had 4 days now of some pretty negative price action in the DXY, which has been good for the open positions that we've been talking about in our Discord. Like the Swiss franc, for example, that trade's been working out nicely. So congrats to anyone that took that trade. But I think this dollar weakness could plausibly continue. Now you can see that. I hate to be that guy, but like these lines are from I drew a while ago as levels of critical resistance. This is like the level where you'd want to short. This is where you'd exit, where you'd cut it, and this is where you'd plausibly take profit. But I think that we could go beyond this level. I'm looking at the bottom of this wick here as a possible level for the DXY, so about 105.5. I think that's very possible by end of week. I think what we're seeing today is a news failure, like CJ pointed out. You have that geopolitical uncertainty, but on the back of that, equity markets look strong. So I think we could see a move up, close this gap, end the week around up here at around 4,400 for the S&P, and then from there we turn back down. That's kind of my long-term outlook. But in terms of actionable insights, I think the DXY continues to trend down. This is a very ugly looking candle here, and on the back of that, I think that sets up some nice Forex trades, things like the Swiss franc, which we've talked a lot about and published trade insights for. This is looking very strong, and I expect continuation. I have a level here marked where I'm going to take 1/3 off, but you can read about that in our Discord under the trade insights section if you'd like. But in the meantime, really, I'm just kind of keeping my eye on the rates as well. This formation's looking toppy, right? We got this sort of shooting star candle implying we could get a reversal back down into the lower fours. If that is the case, then I would expect, obviously some risk assets to really start performing well. So when you put all those pieces together, it kind of spells, today being a risk on day, and we're getting that. Now, is that going to continue into the rest of the week? That's the big question. I think that we have to watch very closely the DXY, see if it's going to break down below that critical level of about 106. If it breaks below 106, I think we see continued positive price action in the risk on assets. And I think CJ made a great example this morning during our Money in Motion show, but he talked about how Coinbase is up on the day, despite the fact that Bitcoin's down. I think that tells you a lot about the risk of this market and where Bitcoin could plausibly go if we see continuation of risk on price action in the equity market. Because in a lot of ways, like we always say, Coinbase is basically just a publicly traded altcoin. So, it is green on the day. It's up almost 1%.
Publicly traded altcoin.
The miner's up like 3%. Take a look at Mara here. I mean, this is not a bad looking chart at all. And if you believe that we are going to go risk on, this is a chart that's been beat up pretty bad. I think you have a clear target at the top of this range. You have clearly defined risk as well, being below here. So, if there were a time to take a shot on it, I think it would be now. So that's just some of the positions that I'm looking at. But I'd love to hear your guys' thoughts on those and some others as well.
Yeah, no, great. I think that's a good segue into crypto. And I appreciate you bringing up some of those, crypto equities, quote unquote, because they've definitely been, I think, performing a little bit better than, the actual crypto market themselves. But one thing I want to bring up right now is Bitcoin. And I think, let's zoom out a little bit. Open interest, although not a massive bump, definitely, bumped up, and we saw a lot of open interest come in, as it was dipping lower. So I definitely think, and obviously you're seeing that open interest close as price rises. So we are in the midst of a bit of a short squeeze, if you will. But just like last week, I lined out the Monday high and the Monday low. And now, of course, the Monday low and the Monday high could change on some volatility, but I think it's always best to mark those out at the close of Monday. And if you actually look, today's Monday low, if that holds, is actually the same as last Monday's low. So, even previous week's Monday range is, even playing into this week's Monday range. So I think it's always a good idea to know where your previous and current Monday ranges are. Just really good kind of trading, especially if you're scalping and analyzing the charts for future moves. So what I'll be looking for, especially if we can get above the 1 hour estimated 200 moving average, which was support previously, now could be resistance. If we can pop over that, definitely think we're in for a Monday high sweep, maybe even last week's high sweep. And then, of course, if we get rejected at this level, which also coincides with the weekly VWAP, which is typically an important number or an important indicator, then we would come down and sweep this low again. So interestingly enough, last week we had very, very technical, price action. We'd never swept the high, but we swept the low multiple times and moved back up, into the upper, upper 2/3 of that range. And then we swept it again, moved higher. And then this line that I have here, this 28,160 number, that's the grayscale high. So I've just kind of had that marked out because it's been important for trading, at least recently. So, but I think, 28 flat, interestingly enough, is the Monday high. That'll be a very critical level. If we sweep it, I'll short it. And then the Monday low at 27,260, if we sweep that, I'll short it. And then obviously, if you break the Monday low, we'll look for a rejection and move higher. And the same thing on the Monday high. If we break above it, we'll look for, it to flip to support, and then we'll trade it up to 28.6. So I think it's best to kind of wait till the daily close, and then you should have some really good trades offered to you towards the end of the week, especially with CPI and equities looking positive. CJ Monte, agree, disagree, or have a completely different outlook than the way that I'm taking it?
I don't have much of an opinion. I wanted to mention this earlier in Money in Motion in regards to Coinbase. But I love that old saying. How's it go? Should have been down, but it's up. So long it. Should have been down, but it's up. Or should have been up, but it's down, so short it. And I think that's kind of the mentality that we're seeing today, given the recent events.
Yep. Definitely. And I think, and just based on how we've been trading, there hasn't been crazy volatility. There's been enough to, scalp some on the 5 minutes and stuff like that. But more than likely than not, I mean, even with the news that we had this past weekend, we didn't break below last week's Monday low. So it does. And I even mentioned this last week, and we did have a couple people say that they wanted to fade me. But I said, we're going to be stuck in between 27.2 and 28.2 for the time being. And we've not broken above 28.2. We've not gone below 27.2. So I think that, we're likely to continue that trend into this week, barring anything calamitous. And I think we just had something calamitous. So I think, it'll probably be more or less of the same this week if I had to guess. So, Monty, any thoughts before we head over on to Ethereum?
No, for the most part, I'm of the same opinion as you guys. I think that the fact that we're seeing, it's kind of, you can look at it in both ways, right? Like with Bitcoin being a leading indicator for Coinbase and Coinbase being a leading indicator for Bitcoin. I think in this instance, Coinbase is definitely, and the miners are being leading indicators for Bitcoin. Right now, it's not exactly easy to get exposure to Bitcoin directly. So it makes sense to me that the price is stagnant. But when you're talking about publicly traded equities, of course, people are looking to get exposure to these things right now. And, I think that it's only natural that we see them overperform and almost act as kind of leading indicators for Bitcoin. So now that we're seeing that Mara is turning around, Riot is turning around, Coinbase is turning around, putting in this defined risk, I think that's a good sign for Bitcoin in the interim. That being said, it's still you got to watch the stablecoin inflows, things like that. Sentiment still isn't great for Bitcoin. And really, you got to think where is the buying going to come from? Is there going to be a new influx of capital? I think in order for that to happen, there'd have to be a very strong catalyst, not just risk on price action in the equity markets. I think that only benefits crypto-related equities and not Bitcoin.
And I think, I'm glad you mentioned sentiment here, because we unfortunately did not go over the spotlight page as we typically do, due to having a bit of a shorter session today. But historically, if you're a Trade the Chain member, and if you're not, you should definitely go to www.tradethechain.com and get a 14-day free trial to experience exactly what we're talking about. But when sentiment breaks below 20, it is usually a good sign. It's kind of like a capitulation of sentiment. It's almost the same as being, in extreme fear. I know CJ likes the fear and greed index. And so, very similarly, we saw a drop, below 20. Obviously, we did recover and we dropped again, but we held the same level that we dropped down to when it was, at the 20 sentiment. So it does look like, this is going to be a bit of a low for Bitcoin temporarily. We'll have to see how sentiment plays out. But anytime you see below 20 or above 80, that is usually a good sign of a reversal, in my opinion. So I think that's, if you are a member and you haven't noticed that, then, good suggestion there. And obviously we're looking at it right here. So I think, good chance for some sort of recovery into the week, provided obviously equities, cooperate, and CPI. I think if CPI is good, a rising tide should lift all boats. So let's move over to Ethereum, which, and you're probably wondering, if you haven't been keeping up with Twitter or the news, why does Bitcoin look like this? And Ethereum looks like this. Well, there's two big things. Vitalik sold, I think, close to 2 million, and also the ETH Foundation sold, I think, almost double that, 3 to 4 million worth of ETH. So historically, those types of actions have marked local tops on the ETH chart, whether that's an issue of confidence or everybody, playing the follow trade or de-risking because of that. It is what it is. So we've obviously had quite the drop here. I'm going to zoom out to the 12-hour because I think this gives a little bit better context. And if Bitcoin can recover, basically what we did is we swept, one of the lows from back in September. The true low is down here at 1530, but we swept this little liquidity range down here, and now we may be trading above it. So I think Ethereum probably is going to at least consolidate, or maybe crack back to 1630 or at least 1610 from here. But if we're looking at the ETH BTC chart, as everyone knows, Monte and I love this chart, or kind of love to hate it right now. But we're in discovery right here, and the wrong kind of price discovery. And typically, the general assumption is 055 down here. So we'll be patient, but Bitcoin definitely looking like a much stronger asset than ETH in the short term. And I'm going to guess you agree, Monte, but I'd love to hear your thoughts.
Yeah, it's the chart that I love to hate right now. That's a good way to put it. ETH BTC, I mean, that we are definitely in negative price discovery, right? That is a fact. We had been highlighting that descending triangle for quite some time. It broke below it on the back of that news that the ETF kind of didn't come through. And now, as you can see from Nick's chart here, it is falling hard. And I think you need to start considering levels to the downside. And I think, Nick, you have those two most critical levels highlighted right there, being that level, that right at that level, at that low, and then obviously the very low there, that point. I mean, if we reach that, I'd be very surprised. But as you can see, you've kind of had to reshape the triangle because the wedge has been broken. ETH is falling, and it's falling really hard. So you got to watch out for this, but I think this also presents opportunity in the sense that ETH weakness presents, the opportunity for you to trade in pairs, like with the ETH pair. So if you're specifically bullish on an altcoin, if you see sentiment is high, perhaps consider creating a synthetic position in the ETH pair rather than just in the USD pair, because ETH is underperforming relative to the rest of the market. So that is just some extra beta you can get there.
And it is also important to note that we have not been under the 1 week estimated 200 moving average since March of 2021. And historically, deviations, we can sit under here for a long time, but when we pop back above the 1 week estimated 200 moving average, typically good things occur. So potentially something to hope for on the horizon. But I would say let this play out. Monte made a very good suggestion about the ETH pairs. But, I definitely, unless you are already in a short, let this play out or wait for a little bit of more price action to come in after the Monday close. And we will reassess. We'll, of course, go over this, every day that we do the show, Monday, Thursday, and keep this going. But definitely one of the more interesting charts on the books right now. So we've got a couple of more minutes left if anybody has a chart. But I do just want to point out one extremely strong chart because it begs a mention just given everything that has happened in the past. But Solana, very, very strong to end September and, not really start October. But, if you look at a bunch of other charts, in the same time frame, Solana's outperforming them. And this to me is a really good deviation right here. I forget exactly where this lines up. Oh yeah, the lines up from the high of when we dumped in August. So I think this looks like a really good deviation here. If you are bullish, Solana does look good. But I will say, I'm wrong on a rejection of 22.5. So in this little zone right here, you're going to see some volatility above this zone, should ride back up to 24. Rejected from this level, and we're going to find some more discovery down here towards 20.5. So I don't want everyone to just think that we're getting all uber bullish and we're buy. These things require a good strong Monday close in my opinion. But come 8 p.m. Eastern, if we close like how we're looking now, I will say longs do look attractive. So
yeah, I bought some Coinbase while you were talking there.
You bought some Coinbase?
Yeah.
We need like an air horn.
I'd rather forget most of those moments.
That was a ninja buy. I didn't even notice you whip out your phone or anything. You bought that on the
Well, you know how easy it is in Robinhood. I really that's not my primary broker, but I do have some cash there, and I really, really am sad they took the confetti out of the app. It was very satisfying when you got filled on a position. Especially exiting a profitable one.
I forgot they had the confetti. I think they got sued, and that's why they had to remove it because they were gamifying it too much.
Something like that.
Thank you, Jenna. We very much appreciate that. We do very much hope that you take something home from the show, and it's not just making fun of me up here in the top left corner. So with that being said, we are going to go ahead and wrap up the show. We are, of course, working with BingX and DideX, BingX being a centralized exchange, DideX being a decentralized exchange. Links down in the description below if you'd like to go ahead and get started and earn some extra rewards on top of your trading profits. And then, of course, last but not least, we represent Trade the Chain. So you can get 14 days free at tradethechain.com. I don't know why that disappeared there. So 14 days free at www.tradethechain.com. You can get all 24/7 access to myself, Monte, CJ, plenty of other experts in the community, plus people who hang out there in every single time zone on Earth. So, and in addition to, a beautiful data product that we typically talk about and represent on most of our shows for trades and ideas. So we'd love to see you in there. And of course, we do this show every Monday, Thursday. Do not forget CJ and Monte every 10 a.m. have a show Monday through Friday. Check in with them in the mornings, check in with us in the afternoons. And with that being said, good luck, happy trading. See everybody on Thursday.